Is Meta stock a buy right now? I think it might be the cheapest big tech giant on the market. And I'm not just saying that, I'm buying it with my own real money. Let me show you exactly why and show you the actual portfolio. Welcome back to Highwater. The idea of this channel is simple. I buy great companies only when they're beaten down and on sale, a little at a time, and I hold them for the long run. Real money, out in the open. So let's talk about why Meta still looks cheap to me. And then I'll open the books and show you where the portfolio actually stands. First, why Meta looks cheap. And I don't mean cheap as in the price dropped. I mean cheap relative to how good the business is. Right now, Meta trades at roughly 21 times forward earnings. That's cheaper than almost every other big tech giant. You are paying a below average price for one of the most profitable, dominant companies on the planet, billions of daily users across Facebook, Instagram, and WhatsApp, and revenue that grew over 30% last quarter. So why is it this cheap? One reason, fear. Meta announced it's spending around $135 billion this year on artificial intelligence. And that giant number scared investors. They see the massive bill and panic. But here's what they're missing. That spending is going straight into Meta's advertising machine, which is already about 98% of its revenue and already growing fast. The market is treating a growth investment like it's a problem. That fear is exactly what created the discount. And buying great companies while everyone else is scared is the entire point of this channel. Now, is it screaming bargain today? Honestly, less than it was. Meta has already started recovering. It's about 16% below its all-time high now and climbing. But at 21 times earnings for this quality, I still think it's a buy while it's below its high. And I'm still accumulating. That's the method. Keep buying a great company until it makes a brand new all-time high. Okay, let me prove I actually do this. Let's open the real portfolio. The total account is sitting about $485, up around 3% overall. And yes, it's a small account. That's the whole point. I'm building this the way real people actually build wealth. Slowly, consistently, one small buy at a time. If you can only start with a few $100s, you're in exactly the right place. Meta is a core position. I own about half a share. My average cost is around $627 and it's trading near $668. The position is up almost $23, about 6.5% in the green. And here's a quick lesson hidden in those numbers. As I keep buying Meta while the price climbs, my average cost rises with it. Each new buy comes in a little higher. That's not a bad thing. A rising average cost on a recovering stock means that the thesis is working. The only time you want a falling average is when the stock is still down and on sale. Then every cheaper buy stacks up more shares. Up or down, consistent buying works in your favor. You just have to know which one is happening. Now, discipline. Meta being up 6.5% is exactly where most channels would pop champagne. Look at the gains, easy money. No, 6% after a few weeks means almost nothing. This is a multi-year hold, not a quick flip. It could be read against next week and it wouldn't change the plan at all. I show you the green not to brag, but because transparency is the whole promise here. When it's up, you see it. When it's down, you'll see that too. There's also a second position, and this is the first time I'm mentioning it. So let me be completely straight. It's SpaceX, ticker SPCX. And I'll say it plainly. This is not Highwater Method pick. It breaks my own rules. It's a brand new IPO trading at a rich valuation. It is not a beaten down bargain. It is not cheap. It's a small, high risk moonshot. A little bit on a company I personally want to own. Keep deliberately tiny. Money I'm okay being wrong about. And right now it's down about 7%. My average cost is around 157 and it's trading closer to 146. A real loss on day one of you seeing it. And this is exactly why I wanted you to see both together. Look at the contrast. Meta, the great company I bought while it was hated and cheap, following the rules, is up. SpaceX, the expensive, speculative moonshot that breaks the rules, is down. That's the entire thesis of Highwater playing out live in a $400 account. Buying quality when it's cheap tends to reward you. Chasing hype at a rich price is a gamble. That's exactly why the method sticks to fortress companies on sale, and exactly why the speculative bet stays tiny and clearly separate. I'm not selling SpaceX over a 7% dip. That's noise. And I went in fully aware of the risk, but I'm not going to dress it up as something it isn't either. So here's the scoreboard. Meta, the core, cheap for its quality fortress, green and held with conviction. SpaceX, the tiny moonshot, red and held with eyes open. A small account, growing buy. A plan that doesn't flinch on a green day or a red day. Going forward, nothing changes. I keep buying Meta while it's below its all-time high. From here, it needs to climb about 19% to set a new one. Until it does, I'm accumulating. And the day it prints that new high, I stop buying it. I keep holding it. And I point my next dollars at the next great company on sale. Quick reminder, nothing here is financial advice. I'm just showing you what I do with my own money. Always do your own research. So, is Meta a buy? For me, at this price, for the long run, yes. And I'm putting my money where my mouth is. If that's the kind of investing you want to follow, subscribe and I'll see you at the next buy. This is Highwater. Buy the dip, hold for the high.